All right, let's talk about something that's on a lot of people's minds, planning for long-term care. It can be super stressful, right? I mean, how do you even begin to prepare for something you might not even need without feeling like you're just pouring money down the drain? Well, today we're going to dive into a pretty smart financial tool that's built to tackle that exact problem.
I mean, this is the big one, isn't it? It's that classic dilemma. You know you should have protection, but that little voice in your head keeps asking, what if I'm just wasting all this money on premiums? That use it or lose it feeling is totally real. You picture yourself paying for years and years, and then you never need the care. It feels like you're just gambling with your retirement savings, and nobody wants to do that.
Okay, but what if there was a way to have your cake and eat it too? Seriously, imagine a solution where you could set aside money specifically for care, but, and this is the key part, if you never need it, that money doesn't just disappear. It goes straight to your family, to your beneficiaries. Sounds too good to be true? Well, stick with me because it's a real thing.
So what is this solution? It's called a long-term care annuity. The easiest way to think about it is like a financial Swiss Army knife. Yeah, it's designed to help your money grow, but its real superpower is that it creates this dedicated, supercharged fund just for potential long-term care costs.
And this is where it gets really powerful. Check this out. You can take a chunk of money you already have, let's say 100 grand sitting in savings, and an insurance company can instantly leverage it. They can turn that $100,000 into $200,000 or even $300,000, all earmarked specifically for qualified long-term care. It's not magic, it's just the power of insurance pooling risk to give your money way more muscle when you need it.
And boom, just like that, the whole use it or lose it fear is gone. It's off the table. Because if you end up living a super healthy life and never touch that care fund, the original amount you put in is still yours. It's there, ready to go to your beneficiaries as an inheritance. You get the protection without the risk of losing your principal. It's really the best of both worlds.
So let's put this head-to-head with traditional long-term care insurance, just so it's crystal clear. With the old school stuff, you're looking at constant premium payments, right? Month after month. And you usually have to go through some pretty tough health screenings. But with the LTC annuity, it's usually a one-and-done lump sum payment. The qualification process is way simpler, and the absolute game changer, the money can be passed on to your loved ones.
Now hold on, it's not quite as simple as just getting one type of LTC annuity. This isn't a one-size-fits-all deal. In fact, there are three main strategies, three different flavors, if you will. And each one is designed for a completely different goal.
Okay, this chart lays it all out for us. You've got three main types. First up is the full LTC annuity. Its whole purpose in life is to give you the biggest possible pile of money for care. Simple. Then you've got an annuity with an LTC rider. Now, a rider is just an add-on, like getting leather seats in a car. Here, the main goal is retirement income, but the rider kicks in to boost that income if you need care. And finally, there's an annuity with an LTC waiver. This one is the most basic. It just lets you get to your own money early without penalties if you have a health emergency. See? Maximize care funds, boost income, or just get access. Three totally different playbooks.
All right, so now we get to the really important question. Which one of these is right for you? Let's walk through this, because figuring out which strategy fits your specific situation is what it's all about. This is where you find your peace of mind.
So, let's ask the first big question. Forget everything else for a second. Is your number one top-of-the-list goal to take a lump sum of money and turn it into the biggest possible fund for long-term care? Is that your main mission?
If you just nodded your head and said yes, absolutely, then the full-blown LTC annuity is almost certainly your best fit. This is the powerhouse we talked about, the one that can double or even triple your money for care. It's perfect for folks, usually between 50 and 80, who've got some liquid cash they're ready to reposition for exactly this purpose. They want maximum bang for their buck.
Okay, scenario number 2. What if your main focus isn't really about creating a huge care fund? What if you're thinking, I want guaranteed income for the rest of my life, but I'd also love an extra safety net, just in case I need care down the road?
If that sounds more like you, then you're probably looking at an annuity with an LTC rider. See, with this one, the main product is all about generating that reliable retirement income. The LTC part is the bonus feature. It's a powerful add-on that, for example, could double your monthly paycheck from the annuity for a few years if you need care. The priority here is income first, with the care benefit as a fantastic backup plan.
And now for our third and final scenario. Let's say you're not trying to multiply your money for care at all. Your biggest concern is just, hey, if I have a health crisis, can I get to my own money in my annuity without getting hammered by fees? You're thinking about flexibility,
and avoiding those nasty early withdrawal penalties, which are often called surrender charges.
For that, the answer is a deferred annuity with an LTC waiver. This is the simplest option by far. It doesn't create extra money for care, it doesn't double anything. All it does is waive or get rid of those surrender charges so you can access your own funds when you need them for care. It's really just a key to your own vault in an emergency, not a comprehensive LTC plan.
Okay, so we've covered the big picture, the what and the why, but I know what you're thinking. You've got questions about the nuts and bolts, the fine print. So let's jump into a quick fire round and answer some of the most common questions that pop up. And here's a huge one. I get this question all the time, especially from people who've heard horror stories about the medical exams for traditional insurance. Do I need to get a physical to qualify?
And the answer is usually a big sigh of relief. No. For most of these LTC annuities, you don't have to go through an invasive medical exam. The process is so much simpler. It's typically just a phone interview and a review of your medical history. That's it. This makes it way more accessible for a lot of people. All right, next up, the tax man. You knew we had to go there. When you actually start receiving benefits from one of these to pay for care, is that money tax-free, or is Uncle Sam going to want to cut?
Okay, pay close attention here because the details really matter. If you have a full-fledged LTC annuity, the benefits you receive for qualified care are 100% tax-free. That is a massive benefit. However, if you have the LTC rider on an income annuity, that extra income you get is typically taxable. That's a super important distinction to keep in your back pocket.
What about if you're married or have a partner? It's a super practical question. Can we just get one policy to cover both of us and keep things simple? And yep, good news on that front. The vast majority of these LTC annuities can be set up as a joint policy. This means you and your spouse are both covered, usually sharing from the same big pool of money. It can be a really smart and efficient way for couples to tackle this planning together.
So when you boil it all down, it really comes back to this one idea. Long-term care annuities are all about filling a really important gap in retirement planning. They give you that incredible leverage for care costs, but they take away that use it or lose it fear that stops so many people. It's about creating a safety net for both your health and your wealth.
So, as we wrap up, the big question for you isn't just if you should plan for care, but how. What's your priority? Is it to create the biggest fund possible? Is it to beef up your retirement income? Or is it all about having flexibility in a crisis? Finding the answer to that is what lets you finally stop worrying about all the what-ifs and get back to actually living and enjoying your future.